In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analysts' predictions are, create a valuation, and review then rate the company. Today we are going to look at Unitedhealth Group, ticker UNH. Let's dive into the process I follow when reviewing whether or not to invest in a company. I analyze financial information against the 12 key pillars. These pillars are based on the insights and teachings of the best super investors, investors like Warren Buffett, Peter Lynch, Joel Greenblatt, and Phil Town, and what I consider to be the most critical metrics when evaluating a business. Ideally, we want to see each metric achieve or exceed a specific benchmark. A company can earn 1 point for meeting the target, or 0.5 points if it falls just short but within 2% of the target. Stick around until the end. I'll reveal exactly what I plan to do with this stock and why it could matter for you. First, what does Unitedhealth Group actually do? Unitedhealth Group is one of the largest and most diversified healthcare companies in the world. It operates through two main segments: United Healthcare, which provides health insurance, and Optum, which offers data-driven healthcare services, pharmacy benefit management, and care delivery. With over 150 million individuals served globally, Unitedhealth has a strong presence across commercial, Medicare, and Medicaid insurance markets. The company's consistent growth, strong cash flow, and scale advantage position it as a healthcare powerhouse with defensive business characteristics and long-term demand tailwinds. Now, let's break down the 12 key pillars. The first pillar is earnings per share growth, which measures how much profit the company generates per share over time. For Unitedhealth, EPS growth over the past 12 months is 55%, well above our 10% benchmark, scoring 1 point. Next is free cash flow growth, which Warren Buffett uses to evaluate how much cash is generated after capital expenses. Unitedhealth's FCF growth is 22%, exceeding the target, scoring 1 point. Revenue growth reflects the company's ability to increase its top line over time. Unitedhealth's revenue growth is 4%, which is below our 10% goal, scoring 0 points. Book value growth, which measures the increase in shareholder equity, is 4%, falling short of the 10% benchmark, scoring 0 points. Now we assess return on invested capital and return on equity. These metrics show how well the company is deploying capital. Unitedhealth reports a 12% return on invested capital and 21% return on equity, both above the 10% threshold, scoring 1 point each. Next, let's look at debt. Joel Greenblatt looks for companies that can pay off debt with free cash flow in under 3 years. Unitedhealth's debt ratio is 3.27, just within our extended threshold of 4 years, earning 0.5 points. With the information we have gathered, it tells us that aspects of the key pillars are solid, but let's explore the company further. Now let's look at the remaining key pillars which help define an excellent business. Gross margin, which reflects how much revenue remains after the cost of goods sold, is 22%. This falls below our 40% target, scoring 0 points. Operating profit margin, favored by Peter Lynch to gauge operational efficiency, is 8%, below the preferred level, scoring 0 points. Free cash flow yield, used by Terry Smith to evaluate how much cash the company generates relative to its market cap, is 9.26%, exceeding our 5% benchmark, scoring 1 point. 10-year book value growth is 9%, just under the 10% target, scoring 0.5 points. 5-year net income growth, highlighted by Bill Miller as a strong price driver, is 12%, exceeding our target, scoring 1 point. In the description, I've included a link to the investors page and the annual report if you want to check it out for yourself. Unitedhealth has shown strong profitability, efficient capital allocation, and impressive free cash flow yield. While some growth metrics like revenue and book value are more moderate, its industry dominance and Optum's expanding services provide a strong runway for long-term performance. As of today, the stock is trading at about $296. Over the past 6 months, the stock has experienced modest gains, rebounding from sector-wide volatility and has fallen heavily since April 16. Here's a quick overview of Unitedhealth's financial metrics, along with what each one tells us. The market cap reflects the total value of the company's shares and signals its status as a mega-cap industry leader. This is $268 billion. Their revenue is $410 billion. They have a massive revenue base, showing scale and diversified income streams. Net income is $22 billion and represents the company's bottom line profitability. They have 907 million shares outstanding. Their EPS is $23.82. P ratio is 12.41. This shows how much investors are willing to pay per dollar of earnings. This seems very reasonable for a mature, stable business. Their dividend is $8.40 per share, giving it a 2.84% yield. Unitedhealth pays a consistent dividend and increases it regularly. The payout ratio is about 35%, suggesting room for future growth. The analyst consensus is buy. Analysts remain optimistic about earnings stability and future Optum expansion. The 12-month price target is $462.04, suggesting a potential 57% upside from current levels. Let's calculate a valuation, using Unitedhealth's current EPS of 23.82, and an estimated EPS growth rate of 10%, assigning a forward PE ratio of 15, and projecting 10 years forward with a 10% return. This results in a future stock price of $927. The intrinsic value is $357. The 25% margin of safety gives us a price of about $268. With the current price being below the intrinsic value, this scores a check. It all depends on your personal view and outlook for the company, as well as the return on investment you would like to see. When reviewing the key pillars, Unitedhealth Group scored 7 out of 12, earning a check. Up until the recent sell-off, the stock price had mostly traded sideways. This may give us a potential buying opportunity, scoring a check. Analysts are forecasting EPS growth of 10%, scoring a check. The current price is below the intrinsic value, scoring a check. According to Morningstar, Unitedhealth has a wide economic moat, driven by scale, cost efficiency, and data integration through Optum, scoring a check. Thanks for sticking with me. Now let me share my personal thoughts and opinions on this company. My final overall rating is 4 out of 5 stars. Unitedhealth Group is a healthcare juggernaut with steady earnings growth, a solid balance sheet, strong free cash flow, and one of the most defensive business models in the market. If you're looking for quality at a reasonable price with long-term resilience and a growing dividend, this might be the company for you. Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.